So yesterday we were supposed to talk about market structure, right? But the network is not really that good, so we had
Yes,
to
yes.
move to today. So let me just start from the beginning again, so that we can be able to record a full class. I believe you
Okay.
were able to learn some couple of things yesterday, but I'm still going to repeat the same thing that I did yesterday. So let's go down to our screen so I can illustrate. So basically,
Yes,
we know that. Okay,
that
go
yes.
ahead.
Although I was trying to, I went to, I went to chat. Sometimes it's very difficult to spot out those settings. Sometimes it doesn't align.
That's why you are learning. You just started, so that the main purpose is for you to first understand the structure, then practice, practice, practice. And there are other things I need to teach you again in appliance to what I'm teaching you, right? Now, there are some cases where you will not see the structure, but there are things you can consider before taking a trade. So for now, just try to. Um, I will let you know when you should start recognizing. I'll be looking for that setup. Once you understand it better and I know that you can actually spot it, that's when I will now tell you, okay, go to the chart and start spotting these things, because I need to show you before you can actually tell that, okay, yes, I can actually get this thing by myself. Now, going ahead of me, right? I've not even taught you anything yet. You might not be able to spot it easily, right? It is just me showing you revision of a prelude or something we are to expect in my classes,
Wait, your
right?
line is breaking.
Is it breaking now?
The line is breaking. The line is breaking.
Is it still breaking
Hello?
like this?
No, no, no. Stop.
Okay. So just be patient and please be calm, right? Don't allow anybody pressure you. Like don't allow anything like pressure affect you for now, because this is time to learn, right? This is time to learn. Once you master it, the rest can come. Even pressure will not disturb, because you already know what you are looking for in the market. So please put everything aside. Forget about everything that is happening now and just focus, please. So let's just continue. Now, when we talk about market structure, generally we know that market structure helps us to identify the movement in the market, right? It helps us to
Yes.
identify the movement in the market. Now, the same thing applies to the advanced market structure. It helps us to identify the movement in the market. But this time, it is helping us understand the characters and movements that will happen before that movement occur, which is before that trend can occur, or before you can find a proper what we can call a trend a proper trend, right? Before you can call a trend a proper trend. So these characters, you need to see them in the market before you can tell that this market is a proper uptrend or a proper downtrend, right? It doesn't always uh, come up like that, but there are other cases where the market will not give you a particular structure, but it will still respect uh, the the steps that you need to see before you can actually take a trade in the market. Now let's dive into the market structure. Normally, we know that uh, in our previous classes, which is the basic class, we know that the basic market structure is for you to identify that the market is creating what higher highs and higher lows, just like this, right? But in this type of
Yes.
um, market that we're going to be learning, this advanced market structure, the market is not just going to be creating highs and lows, right? We need to identify the areas of proper highs and the areas of proper low. The things we need to see before we can actually tell that this place is a proper high or a proper low. We can't just call every places we see high and low, right? And say we want to trade it, right? We should know the actual one we want to trade from those highs and those lows, right? And we all know that we want to be buying at what? The low, and selling at what? The high, which is it can also be said to be what? Support and resistance, which is what? Buying at support, selling at resistance. How does that structure actually look like? Most times, the market moves in a particular direction that you need to understand, which is creating an improper pullback or an incomplete pullback, before it creates a new break of structure, just
Yeah.
like this,
But
and so on and so forth. Yeah, just like this, which I already sent the picture to you already on the Telegram. So this. Now this is also an eye. This is also an eye, right?
sorry, excuse. What is wrong?
Yeah,
Go and plug it. Now. Take power bank and plug it. Sorry.
I'm with you.
You can go on.
Now this is an eye. This is also an eye, right? Higher eye, higher eye, right?
Yes.
But one of them is not the major one you're supposed to be focused on, which is this minor one. So the first thing you need to understand is the market will first break structure, which is a minor structure, before it breaks a major what structure.
Sorry, but sometimes the as it break this minor structure, it will still consolidate inside it or create sometimes it create equal highs.
Forget about equal eyes or the ranging market. Focus on the structure first. Leave those
Structure.
ones aside. When you get there, you would understand. Now, bringing up all these things, the reason why all these things is like that, let me not lie to you. The reason why you're facing me, you asking me these questions, now is because you already have prior knowledge of the market, which has been jam packed, right? Now, when we get to that level, those questions will answer themselves. But for now, let's say we are still at the beginner stage.
Okay.
You are trying to jump into advanced stage, and it's not possible. First thing is for you to understand the structure. The second thing is to learn how to identify the structure, even if you see all those things you think you know. Those things will occur. You should learn to ignore it and focus on the structure. Now, the market is going to create so many noise, and those noise is one of those things that make you feel as a trader. Once you can filter out those noise and focus on the major things, you have cut out uh, so many problems you are facing in the market. Are you with me?
Yes.
Now, for now, like I said, behave like you don't know anything. Put those things aside and
Aside,
focus.
yeah. Okay.
Now, the market always creates this, which I'll be showing you an example in the chart. Right? The market won't just create a support and keep on buying from there. It will first create a minor support, then it breaks above the minor resistance, then it will pull back. We call it swing high and swing low. Then it will pull back from the swing high to create a swing low that breaks below this previous support. Support, right? To break out the previous what? Support. Meaning that for every structure, you must see a minor break of structure after the major one. This is the major break of structure, right?
Yes.
Then this is the first eye, which is the minor break of structure, right? Then the market swinged above it, which is broke above it, then went back to take out this word support again before it continues buying. Let's call this support area B. right? So the low that the market is going to take out is the B part. So the market must create this B, break above, then swing low to take out the B. This area becomes your entry. Don't worry, I'll be drawing a more simpler structure that you can use to recognize this. So basically, this is how then if you call this place E, this place becomes what? The C, right? Now this is how the market is going to be moving in a proper advanced market structure movement. Some people call it algo structure, right? Now this is an uptrend for that. I already sent this image to you, right? So let me make it simpler for an uptrend. It means that for you to be able to buy a particular market, you need to see something like this, where this is A, this is B, this finger is the C, then the one that broke below this B is what? Your entry. The first thing is what? You need to see a break of structure, then we see after the break of structure, we see a retracement back into the previous what? Resistance here, which is the minor pullback. Then that minor pullback will create a C, which is a swing high that takes out the what? Resistance. And this swing high is what we call the C. The origin here is what? A. Then this becomes your what? Entry. When we get to entry purposes or entry reasons, we will talk about types of entries. But for now, just focus.
I will use fib if I want to mark this.
For now, you don't need to use fib. I'll tell you when you are ready to know how to use fib. Fib is going to help you a long way and refine your what entries. Do you understand?
Yes.
So this is the major structure, meaning that for every movement you are looking for a break of structure, a retracement back into the previous structure that is an incomplete pullback, then creates a C, which is the one that will break above this resistance, then swing back and take out the B. This area is what SMC trader call the inducement, then swings back into that zone, taking everybody out, then using a particular area here as entry, which we will be learning later on, right? Price action, types of entry. Then at this point, there are things you need to see before you can say you want to start buying from here, which is confirmation entry before you buy. Are you with me?
Yes, yes, yes.
So for every structure here, you can see this structure here is basically what is here, is basically what is here, is basically what is here. So this is the structure you want to be identifying in the market, right? So for
Yes,
now,
I'm
just focus. For now, I'm just showing you the things you need to see in the market. Then the rest thing is what, taking it one step at a time. Let me send this to your Telegram or WhatsApp, anyone you feel is comfortable for you.
Oh, Telegram is okay.
Okay. I've sent it to your Telegram. So the same thing applies to the downtrend, right? Once we draw out the structures for uptrend and the structure for downtrend, we'll now go into the chart to identify it. So once we identify it in the chart, we'll now go into what, the uh, the change of character, which is what, when the market is changing from an uptrend to a downtrend. When the market is changing from an uptrend to what, a downtrend.
Sorry, is this you call the strategy? Is this type A?
This is basically type A setup.
Okay, type A setup. Okay.
Yes, this is basically type A setup, high probability trade. So I want to delete all this and draw another thing on the chart. So the next thing I want to draw is the downtrend structure. And so on and so forth, right? And so on and so forth. It's just the vice versa of the other one, where this is what, this area is our A. Oh, sorry, I don't need to put A for now. This is the area is our B, C, entry, and sell. A again, B, C, and sell. A again, B, C, entry, and sell. You already have the structure in your Telegram already. I don't need to send it again. It's just the
Yes.
vice versa of what, the bullish movement.
The bearish market. This is the
Uh,
bearish.
this is the bearish structure, right? Now, let me now draw just one single structure of that bearish movement. So basically, you are expecting something like this in the market. Let's see, incomplete pullback, breakout, which is break of structure, entry, then sell, entry, then sell. So this place is the entry. This is your B, right? This is your A, and this, your swing low, is your C. So basically, this is the cell structure. So let me screenshot that and send it to you.
So you are saying like in this structure now, we cannot sell two times. It's only once.
No, just once. Now, let's now apply the Fibonacci. Now, the first thing is once the incomplete pullback creates itself, most times it will not get to your golden zone. I hope your Fibonacci is being configured just the way my own is.
Yes, I think.
Yeah.
Yes, yes.
Now, this Fib, most times this first pullback is not going to get to the golden zone. It is the second pullback that majorly gets to the what? Golden zone. So for you to know that this is an improper pullback, you need to place your Fib from this high to this low. The low that broke structure, the first structure, the break of structure, the first break of structure here. Once you apply it and the market did not get to that zone, you are not going to take that trade. Are you with me?
Yes.
Until the next one, which is the second break of structure, first break of structure, second break of structure, the next high is where you want to place your Fib. Then wait for a pullback that breaks below the B, which is what they call inducement in SMC. Then wait for entry. The entry reasons which you don't know yet until I teach you the proper way to identify those entry reasons and a reconfirmation before you can sell. Are you with me?
Yes.
So let me copy this. This thing is recorded already, but let me just copy those images and send it to you. Because sometimes you might not want to watch the video, you just want to look at the image
Yes. Yes.
before you can skip to that point where you see the image. So this is basically the same thing applies for the uptrend, right? Once you see that the market, right, creates this for buys, right? So this one becomes basically your B. This area becomes technically your A. You know, this is your C, and this is your entry here. So this is your entry here, right? You can see it created. Um, okay, I have something that I didn't add to this. All right, as you can see, it created the first break of structure. And second break of structure. So the same thing applies, just like the way I taught you to sell. Once you put it here, and the first one did not get to what? Our golden zone, right? First break of structure, the high did not get to golden zone. The next one is the one we are targeting. When it gets to the golden zone, we look for entry reasons and a confirmation entry before we what? We buy. Are you following me?
Yes, yes.
So basically, this is the setup we'll be talking about most times. I've sent it to your Telegram.
Okay.
So let's look for examples of this before we now move into um, the reversal, which is what areas at which the market is changing from an uptrend to a downtrend, right? So let's look for examples on the chart. So let's say this is a downtrend, right? This is obviously a downtrend. Are you with me?
Yes.
Now, how can we take a downtrend? Look at it closely. Started selling from here. First break of structure, second break of structure. Then you can see this is
The first one break the structure.
this,
Yes.
then this. Are you following me?
Okay. Yes.
You can see it broke it a little, even though it's small. Because if you are say higher, low, you see this is what? Lower high. This is a lower low because it's lower than the previous one, right?
I thought it's this low that is there if it break this that major low that created that high. Sorry, I'm trying to.
I know. I'm looking at how I'm going to explain it to you. When it comes to this setup, right? Forget about that old retail strategy now.
Okay.
The first thing is understanding the areas of highs and lows, right? Then we all know that this is what a lower high. Let's start from a lower high, lower low, lower high, lower low, lower high, lower low. At some point, this would not be available. You would not see this. This is the only thing you see. So as a retail trader, you would have taken yourself from here and the market would have been buying, selling to this point, which you would think that the market has started creating a new low. When this is not there, this setup wouldn't have happened yet. Forget about what's happening here and focus on this place,
Okay.
right? First break, second break. Where is that part two? Not this one. So this is our A here, the first break of structure, our B here, second break of structure, then a swing high, which is our what? C, then the sell. Can you see it now?
Yes.
That's why I use the part two. This is our A, B, C, the one that is higher than the previous one, that is lower than the previous one, rather, for the downtrend. Then our entry, then sell. You can see it's basically what I just taught you.
Yes.
Let's do another example. This is another break of structure, right? Are we together?
Yes.
And this is another break of structure here, right? This one here. Can you see it?
Mm.
Now, this is our A, first break of structure, B, second break of structure, which is what? The C, then the swing eye, which is our what? Entry before it what? Sells.
So,
Are you getting it?
yes. Can we use and see?
You can see, right?
Can we use fib?
Yes, we'll use fib. For now, we had identified that structure now.
Okay.
Hope you are getting it.
Yes, yes, I'm getting it.
So please be patient. It's step by step. Now you can see how the structure works, right?
Yes.
Now let's now apply fib with it for this downtrend. A, first break of structure. Can you see? Stanley, are you with me?
Yeah, yeah, I'm with you. I'm
You see that
using
the
it.
first
This.
break of structure did not get to the golden zone,
Yes.
which is the B. The B here did not get to the golden zone. Then the next one is this one, which is what? The C. Are you with me?
Yes.
Then you can see the C went up into the golden zone and what? Sold.
So
Can you see that?
yes.
Let's go to the next one. First break of structure, second break of structure, right? This entry now becomes what? The A, the B. See that the B did not get to the golden zone.
Yes.
Then the C, then you can see that the C was able to push it down into the golden zone. Stanley,
I'm here with you.
yeah, I need you to follow me. Then you can see
No,
that
I'm
this
following.
one,
The thing I'm looking up is because I'm using big screen. That's why.
okay, it's so much better. You'll be able to see it better. Now you
Yes.
can see this C was the one that this C that is the one that pushed it into this zone. Then he gave an entry, then he sold. You can see he sold to the TP area.
Yes.
For the sell, the first one we saw was this one, which is the one that gave us this sell. Let's assume this is our stop loss, which we will be refining the stop loss. But for now, let's focus on the structure and how it works with what Fibonacci. Then you can see how it sold. Now we used the previous low as our take profit. And you can see how I got to the take profit, right?
Yes.
Like I said, you can decide to be a disciplined trader and say, I don't want to take more than 1:4 in the market. If the market does not give me 1:4, I am not going to take profit. So I can actually extend it to 1:4, and it still gave us what? 1:4. Hope you understand that 1:4 I'm talking about.
Yes. Yes. I understand. Understand.
Then see the next one, which is this one. So let's place our short position 2. You go to the entry, right? We'll talk about entry very well later, right? Stop loss. Then TP is at this low, which is definitely 1:4, and the market took it out for a profit. Hope you are following me.
Yes.
So that is how you'll be trading like that and like that and like that. So let's look for a buy. Hope you understand this one.
Yes, I understand.
Now, we'll be doing more of this on the long run, right? Then we'll now tell you the ones. Sometimes if it does not show up, this is what you need to consider before you can take that trade. But for now, let's focus on the type A setup because that is majorly what I trade. I don't bother about type B. Type B setup is 50-50, right?
Yes.
So let's look for a buy um, a buy trend or an uptrend, so we can work on that too.
But sometimes, sorry, sometimes it will still go and touch to your zone like twice or more. That your like if
Don't
you have
worry, that's entry. When you get to entry, you understand that one.
okay, okay.
That's why I said for now we just want to focus on the structures.
Structure, yeah. Sorry, let me on the phone.
We're looking for a buy market, which is uptrend. Let's use a higher time frame. Buy structure, buy structure, buy structure. Range. Higher probability that this market is still to sell to this point. There's higher probability that the market will sell to this point. So for now, like this kind of market now, if you look at the Fibonacci from here to this point, you can see that this market did not pull back to this place.
Yes.
So this kind of market, you would wait till this market comes back to this golden zone. As it has created this high, right? You can see it's already dropping down to this area. So this is going to be a massive movement if the market gets if the gold gets to this point here, right? Then I'll be
Yes.
looking for a reason to what set buy at this point. So this is a long-term trade, not the scalping. So this setup is good for both long-term trade and short-term trade. So this is an uptrend. This is an uptrend. So let's start from the beginning. A, B, C, entry, and buy. Applying Fibonacci. So I didn't get to the golden zone. The next one got into the what? Golden zone. You can see that.
Yes.
Hope you can see that.
Yes, yes.
So the next one is this area, right? One. Now look at this. This one is different from the regular one. Like I said, there's a reason. Sometimes if the market does not create that B, there are other reasons. Meaning that if the market is an uptrend and it basically just come down to your golden zone, then there is no point. You can take the trade directly. We'll talk about that later, right?
Okay.
That is if the B was not created. That's my type 2 setup. So let's go to the next one, right? Now you can see there's a trend downwards here, a minor trend. Unlike this one here, there's no minor trend. There's no minor trend, right? This is I, the last I that created the last low. Focus, please. Now this is what? The B that tapped into this I, which is the last low, I that created the last low. This is the C, and this is what? Our entry. Then a what? But. But if there was no trend inside like this, obvious trend like this, then it will what? It will not matter. We'll be looking for B above this place. But there is a minor trend inside that created the B, C before a what? But.
So we should also count like because this B now, this
Yes.
minor that didn't break the first one.
Yes.
So we also should count it as a first high.
Yes. The one that didn't break this one. Because
Yes.
it shows obviously that it's an uptrend, a downtrend rather. It shows that this market is trending downwards. If it's like this one now, you can see how this one went straight. There's no trend in between.
Yes.
And the only thing you can find here is this one, which has been taken out already. Because if you put your Fibonacci from here to this point, this one is already a complete pullback, right?
A
So
complete
this,
pullback.
yes. Don't worry, we'll get to this one when we start talking about areas where you need to place your Fibonacci. The proper low you are supposed to place your Fibonacci, and the proper high, or the proper high and the proper low you are supposed to place your Fibonacci. But for now, let's focus on what? The structure. Once you understand the structure, those other ones I'm talking about becomes very easy for you to identify. Most times people fail to identify the structure, and that is where the problem starts. So let's start with the difficult one first, then we'll now go into what the little ones,
The minor one.
the minor ones. So you can see this is basically same structure. If you put your Fibonacci in whatever area, you can see it's incomplete pullback, a complete pullback. Can you see that? There's a reason why I placed my Fibonacci at this edge. That's one of that thing. That's what I'm talking about. There are areas where you're low. You would not choose the extreme low. You will use the next low, because that low is a complete pullback.
Okay.
We'll get there. So you can see the market got into our golden zone, then what? It bought.
But this
But
wink
since,
that it shows, does it have to? Will it give you confirmation with that wink?
yes, don't worry, your confirmation is before this movement. It has to be around here. Your confirmation is around here.
Okay.
But we have not talked about confirmations yet. What you'll be seeing around that side, it's just the structure we're talking about. So that's those things. If you see your confirmation here, that is where you want to be placing your pending order.
Okay.
So you wait for the market to get your pending order, then buy. So you can see that this one, look closely, it gave this structure like if it's going down, lower high, lower low, lower high, lower low, right? So obviously it created this rejection here. But I will not be teaching you that. This rejection is also a B. But because it's just a tiny rejection, you might not be able to identify it yet. But you can see how the market came back and took it out before it started buying. This rejection candle you see here, if you go down to a smaller time frame, it will become a proper B.
Okay.
In a lower time frame, that's if you want to scalp the market, you'll be seeing this one as a proper retracement, which is what an improper retracement rather at this point. Before the market comes back and took it out, then buys. So if you place your Fibonacci at that point, don't worry, you will get it on the long run. You might not get it once, but you get it. This is our first class, basically. You can see how the market go to the golden zone and bought. Right? So the same thing applies to this one here. I took this trade, obviously. This one is the one. You see, it has the minor trend, which is what? Lower high, lower low. Can you see that?
Yes.
Then you can see this is the B, right? You can see it didn't get to our golden zone. Are you following?
Yes, I'm following you.
Then you can see it went up, then came back to that area before it what? It bought. You can see. You can see how it took it out, then buys
Yes.
from there. Same thing applies, and so on and so forth. That's why I took this trade. Even if you didn't even get my TP before, but this is a lot of pips. I would have broken even out. Showing you how to break even when the market has already moved and you just place your stop loss above your entry, which is what trading the market. So when the market went against me, I took profit. I scalped this one towards the profit, right? Then this one was a long trade, and the market went above for a long time. Then it came back and took me out, but took me out with profit because I've been trading it at this point. So that is what we'll be learning on the long run. So tomorrow, right, we'll be talking about the reversal. Today, let's just leave it at that. So the assignment I'll be giving to you is you identifying those structures that I taught you today in
But
the
the one that
market.
is difficult is that inner structure, just the little ones. But I'll
Which one?
try. Like
Forget
those
about
ones you
those little ones. The ones that you should identify is the ones that you can actually recognize, which is the simpler one to recognize
okay.
for now. Or are you talking about these minor trends inside? Are you talking about this type?
Yes, yes.
Yes, okay. Let me show you. Let me explain this one better for you. Let me go back to this place. Now, when it comes to something like, let's say the market is like this, then we have a minor retracement that looks like this inside of it. Then the market goes up and created something like this. So it means that when the market breaks above the major resistance here, we wait for the market to come back and take out this B, right, in this minor what structure. Hope you are getting it.
Yes.
Then before it buys. So what you are going to be doing now is once you place your fib at this point and you realize that this is an incomplete pullback, the next one is when the market creates a C, right? Then this C is the one that comes back into the golden zone. You look for entry around that zone, then you will buy. This is the type 2. The other one without B is the type 3.
The other one without.
B at all
Okay.
is the type 3, which is the lowest probability trade. This one is 50-50, and that the one I'm
Which
showing
one
you,
is
the vision
50
one.
50? The first one. The
No, no,
first touch.
no. Let me show you the first one. This one is 50-50 rather. This one here, which is type B. that goes into the minor trend before it goes. This is the minor trend. The one that come back and take out the minor trend before it buys is the type B. This is the type A. Let me show you the type A. This is the type A structure. You can see that the type A basically came back into this area, created an incomplete pullback, touching the what major I, then went on to create a C, take out this B, and buys. Okay, this is what I'll do. Let me send this to you as type B. Let me label it. So let me send it to your. Then the one I taught you at first, these ones that I taught you that I've sent to you first is type A.
Okay.
That's the first one I taught you. Then this one that has a minor structure inside of it is type B. Have you
Okay.
seen it?
Yes, yes.
So just go back to the video or the pictures I sent. So the first set
But
of picture I showed you is what type A. The second picture I wrote type B is the type B structure, which is the one that has a minor trend inside of what the major structure. Are you with me?
yes.
Then type C is the one that just goes down like this and buys. There's no B at all. It's just swing high and swing low.
Okay, this is type C.
This is type C, just straight. So let me label that and send it to you. So these are the things you'll be identifying in the chart for me. If you don't get it, just send it. Don't worry. If you don't get it, to tell me the areas where you're having problems. I'll be able to identify where you're having problems, and I'll be able to fine tune it in a way where you understand. But anything you
Proba-
see,
Probably it will be all
I
those
didn't get that.
uh, all those ranging that is inside the swing guy and the swing low. Because sometimes I don't know where to mark from. Sometimes
The phone.
I'll be marking the fib from the previous. For instance, if it's a uptrend, I'll be marking to the lowest low.
Oh, okay. No, it
Yes.
shouldn't be like that. Don't worry. When we talk about the trend, I say trend in our next class, you will understand much better. But our next class now, which is tomorrow, I'm rushing the class for you because you said you are going to be very, very busy. So let's just take the class and learn very fast. I'm just sacrificing my time for you. So the thing is, first thing is to identify a proper trend, a trending market rather. And you already know that when the market is trending, it's moving towards the upside of the market or a downside of the market,
Yes.
not in between. So for example, let me use another chart entirely. It's not just gold. It happens everywhere. Let's just use another time frame. So identifying the trend. Yes, identifying the trend. Now you can see that obviously this market is what a bullish trend.
Yes.
Now you have to make sure that the market is bullish. Now not because the market is just moving upwards. Now you have to identify again if the bullish trend is a proper bullish trend. As it is like this market started trending from here, right? But at this point, the market failed to come back to this previous what high. So at this point, this market is not a proper trend yet until it comes back to take out what this one. So I'm expecting this market to do what? Use this as a B, you can see, come back, take out this B before it continues buying.
That's okay.
Don't worry. You know, say all these ones now proper trend now, proper highs and lows. See, you see, say you reach the golden zone.
Yes.
You see, say you reach the golden zone, Abi.
Yes. Yes. You know why it's confusing? Because then they say we should not mark any fib at the initial class. That we should mark the fib from the
Lowest point,
lowest
Abi.
node. Yes.
That's why I said forget about that one and focus on what I'm teaching you now. Because if you keep on, how will I put it? If you keep on referencing to something that I know that it does not really work, it's just basics. It's not that it does not work,
Work.
but it is low probability.
Yes.
Retail strategy is 50-50 most times. Most times it will not come. Sometimes it will come.
I don't used to see it just few times.
Do you understand? So I'm teaching you the one that works, like it works very well.
But this
As
one
I said, for
come more often.
I didn't get what you said.
Like this ones it come more often in the market.
Sorry, I didn't get that.
Like this strategy now, it
Yes.
come more often. Like you can see it more in the market.
Yes. 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 Yes.
You know, like because they were saying that most of the time, SMC traders they might not see trade in 1 week or so.
Yeah. I told you yesterday too now. I don't trade
Yeah,
SMC. What I trade now is different from SMC, and this is what I trade. Because I be high frequency trader. If I go 1 minute now, I go see plenty setup where I go trade using the same strategy that I taught you. So like this one now, for this uptrend now, right? If I look closely, it didn't give me anything. Then I'll go to another place. I'll go to another pair, right? From here now, I know say the thing will give me. See this B, right? This tiny B. This is 1 minute time frame. B, C, my entry, and it bought. I don't scalp, I don't come out. The next one, A, you can see this is B. He took it out again, created another break of structure, created my entry, and it bought again. You see, say for GBP USD, I know see setup. I know bother myself. I come Euro USD, right?
yes,
And you can see from the beginning, the market has been giving me what? A good structure to trade. And this is very fast. This is 1 minute time frame. In and out, in and out. Then you see the second one, the next one. This one did not give me B. This is type what? 3, which is type C.
I see.
It just went straight inside. You see, no give me B,
Yes,
right? So you see why he got here and he what? He bought. Now look closely again. Hello? Good afternoon. Are you outside already? Okay, I'm coming.